Mark, I noted in your piece on the terminal that August 5th is statistically the most volatile day for U.S. stocks, but you are seeing August being one of calm. Why?
Yeah, it is statistically the most volatile if you measure it as by the average move in the VIX. That's going back to 1990, the last 35 years. And this kind of belies the idea that, you know, some are absolutely quiet markets. It is normally quiet, interspersed by moments of extreme volatility. Now, early August is when we get a lot of the volatility, quite often because we get jobs data often after a Fed meeting that kind of changes the narrative. But we already had that all so far in August. In fact, last week was an incredible lineup of catalysts, both scheduled ones and unscheduled ones, like firing of BLS chiefs, etc. And so I think it's pretty hard to shock the market from here. So I think we're into summer markets here, and I can tell that my trader chats, like last week, people were consumed with how you trade this. The last 24 hours, all my chats are consumed with more holiday planning and flight disruptions and topics like that. So it shows that the focus has changed. Summer markets means we normally kind of drift a little bit higher. That's the natural trend, and then interspersed by sudden dramatic sell-offs, sometimes on inexplicable moves. And I expect that to be the narrative in August. I would say not to read too much into the positive price action at the start of this week. We talked yesterday to dismiss it. It's been incredibly resilient, but it is on lower volumes. I think volumes in the S&P 500 were about 23% below the 20-day average yesterday, which just shows that declining interest.
So what is the next catalyst in August then?
Yeah. I'm actually struggling to do it because we got earnings out of the way and they've been really, really positive. I still think that tariffs is one of these slow-moving catalysts. You know, the fact is August 7th is now another date. There's always a new date, isn't there? We're still playing a full taco trade when it comes to Swiss stocks. So I think that there's still some more negativity to come in around tariffs. We've got no more major earnings until NVIDIA, really, on August 27th, which is kind of the big one for now. And I think we've got a lot of those catalysts out of the way. So I think we're kind of waiting for CPI next week, which means this week should be a positive drift, but I'm very, very worried by the material damage in last Friday's news flow, both in the data and what's happened in terms of Trump's moves against the BLS chief.
And Mark, I know you to be sort of pessimistic at times, and having lived at the sort of heart of the sort of Lehman crisis, how dangerous, as you just said, is an unshockable market, and how do you sort of think about that?
I don't think it's particularly dangerous. Actually, I think the structure of this market, I mean, I remain longer-term very bullish global equities, and I think there's an abundant liquidity around the world, and there's increasing liquidity coming from China and the US. I still very strongly believe that it's a world where US stocks will continue to underperform, which is a theme we've seen since the end of January, and I think in August, I'm worried about US downside. I think August will be that tactical sell America narrative again. But remember, sell America narrative can only ever be tactical because these are the world's most profitable companies and they'll continue to churn out a lot of cash. But I just think that there's a short-term window for that. But the structural environment is very good, and I think people get very excited by the fact that we've got, you know, meme stocks doing well and bubble issues. We've got endless liquidity in the world, and growth is still holding up okay. But Friday told us that the narrative on growth might be shifting, and it's shifting more negatively for the US, and that's why I'm worried about sell America in August.